So we want to welcome everybody to our first Tip Tuesday Live. We're actually we decided to call this Takeover Tuesday because we have a special guest that's going to start taking over our Tip Tuesdays. As you know, our goal is to try to provide education to the community about real estate, and that's what we like to get out there to everybody, and to make sure we incite. We have, after years of doing this, we all have a lot of knowledge, so we want to make sure that that information gets out there to the public. So I'm Chantel, and this is Betty. And we also, our marketing assistant, Sarah, is here. She's going to be reading off the comments, and she's going to be helping us to make sure we have no technical difficulties.
Yeah. Hopefully it goes smoothly. It's the first one.
Yeah,
so.
This is our first Takeover Tuesday.
Nerve-wracking.
Yes, everybody that's on has to let us know how we did.
Yeah.
Yeah. And also, if you want to see different content, because sometimes it's, every time we get a Tip Tuesday out there, it's because of something we've come across in the contract or with the buyer or seller, and we're like, hey, we need to really get that out there and explain it. And it's stuff that we explain a lot, so we want to make sure that it actually makes our job easier, because sometimes we'll just send our clients a Tip Tuesday and say, hey, watch this video. It should explain everything. So if you have any content that you want to see or any other information, please, we love your feedback. Give us that information. And I would like to invite our friend today. We have our loan officer and friend, Cassandra Farnese. Cassandra, what company are you with?
I'm with Premier Mortgage Resources.
And are you a direct lender?
Yes, we do everything in-house, underwriting, funding, it's all us.
Awesome. And so that kind of gives you a little bit more control too, huh? Because you're a direct lender. How many years you've been doing? How long have you been doing this, Cassandra?
Since 1989. A long time.
Wow. That was before Betty was born.
Stop it! I am 29 years old.
And healthy.
Yes, yes.
And so what do you specialize with? And, tell us a little bit about what you do. And
we do residential home loans, so no commercial, although I can broker those out if we have them. So conventional, FHA, VA, USDA, we have down payment assistance with several different programs. And I seem to be doing a lot of help for self-employed borrowers right now, alternatives to qualify them and not have to use their tax returns. 2020 was tough for some. Yeah.
That's cool. That's really cool. So USDA, you mentioned USDA, where are you able right now with Monterey County and San Benito County, where are you able to do a USD loan? Because that's, I don't know if a lot of people know that, that's like 100% financing.
100% financing. I used to do tons of them. They're good loans. We call them a conventional loan with an FHA appraisal, but they are mostly right now South Monterey County. So anything, outside of Salinas heading south, Gonzales, Soledad, Greenfield, King City, any of those I can do USDA.
Okay, good to know. And what about San Benito?
San Benito is out. With prices the way they are, they won't fit for USDA anyways. But yeah, San Benito is no longer eligible.
So you mentioned the price. So what's the cap on the price?
There isn't a cap limit, but the way that they do the qualification and ratios and the income limits, mostly buyers are only going to be able to qualify for conforming loan amounts.
Okay. All right.
Okay, so let's talk about what we're going to talk about today. We get a lot of questions. How's the market going? A lot of questions on forbearances, and that seems to be like all the news articles. Are forbearances going to cause the market to go down once they're due, which I don't know, by the end of the year, or the end of the month, but we'll talk more about that. So how is the market? Is it strong? Is it volatile? We know it's high. And then if there are any questions afterwards, then we can, talk about those too. So kind of like a market update, I guess, a market update to Tuesday. You want to go through the disclaimer now?
Yeah, so as you know, just disclaimer, we can't foresee the future. So all the information that we have included in this is based off of articles that we've done research on, and we're just
And experience.
And we're just trying to provide that out to you. And if you are,
Yeah, if you're interested in getting some articles, some quick links that have some of the topics we're talking about today, we can email those to
or
you.
where we got the stats.
Yeah, we can email those to you. So just DM us your email address and we can send that over. A lot of them is from like Market Watch and Forbes, Fannie Mae, Direct website, all of that. So if you like any of the resources, let us know.
Okay, so we'll get started with our questions. So first of all, forbearance, because that's a really hot topic right now. So Cassandra, what do you see happening, and is there a way out if you cannot afford to pay it back? You know, can they refinance? What are the options?
So there's lots of options, and actually I send out emails every once in a while to kind of update people of what's going on in the market. But servicers do not want to be in back in 2009 era. They want to help as much as they can and keep people in their homes. The good news is the consumers that are in some kind of forbearance plans have dropped month over month, and they're exiting with good plans that these servicers are working out for them. So the CFPB also stepped in and said, we're going to issue some safeguards this June, which include the servicers exploring loan modifications and even helping borrowers that may need to sell their home. Everyone's got tons of equity right now, so no one wants to leave that on the table, and that's what's different.
Okay. Are you there? You're
We
muted.
can't hear you.
Can go. Yeah.
Whew.
Can you hear me now?
Yep.
Okay, good. So they can go into a repayment plan. Options range from servicers. They can include moving missed payments to the end of the mortgage term. They can split up the payments that they missed and help them pay a little bit extra over time, or they're doing full loan modifications and restructures to the mortgage.
I did have, I knew somebody personally that actually was in forbearance for the last year, and they just gave her just insight. Her lender just gave her a 3-month extension on the forbearance.
Yeah, and I think, well, there are still, quite a few people in forbearance. I think I had that number somewhere, but
It says about 1.86 million are in forbearance right now. That's 3.5% of all active mortgages. And that was a drop below, it's the first time the total has dropped below 2 million since April 2020.
Yep.
So there's still quite a bit. Something that I thought was interesting on the National Association of Realtors website, 77% of homeowners that exit forbearance had a loss mitigation plan. And then there's a couple, like you had mentioned, the loan modification, reinstatement, continuation of the monthly mortgage payment. And that kind of talks, I don't know if I'm getting ahead of myself, but the question is, are these forbearances, are they going to foreclose on them? And if that happens,
a lot of people think that we're going to go back to the financial crisis that we had in 08 and 09.
So with that stat, I thought it was interesting that we have such a shortage of homes right now on the market, 5 million shortages of single family homes compared to 1.8 million seriously delinquent mortgages. So the ones that could potentially be foreclosed on, that still leaves, what's my math? Did I say 3.2 million home shortage still. So there's still quite a bit of inventory.
And I kind of want to back up a little bit, because I was actively working in 08. Vanco had a lot of the REOs. We were one of the big heavy hitters with REO companies. And what was happening at that time, I wouldn't even look at a short sell. And if you want to know what a short sell is, just
do a Tip Tuesday on it.
We'll do a Tip Tuesday on it. But I wouldn't even do a short sell. I wouldn't take a short sell listing because the lenders weren't working with us, and they were just foreclosing. And I think in California, by law, they can actually, from the time you miss your first payment, they can foreclose on you within 6 months and 21 days or something like that. So they were just bam to the day. They were just foreclosing. And it, you know, there was just empty homes and vacant homes and, you know,
Horrible, yeah.
Yeah, it was horrible.
Totally different.
Lawns weren't being mowed. And a lot of people think that this forbearance is going to be the same situation. So I like the stats that Betty came up with, that it's still, what was it, the percentage wise?
5 million shortages of homes compared to 1.8 million seriously delinquent mortgages. So there's still a lack of inventory, even if
I was thinking this stat right here,
yeah.
where 4.7% of delinquent mortgages, as opposed to 2008, there was 10%. So it's half of what there was. And then, you know, then they got the big bailout. So
and
then
they're trying their
yeah,
best.
and they're not going to just start foreclosing on homes like they did in 08. There's just no way.
No, and I agree 1,000%. I think the big difference is then people even just did strategic foreclosures. Consumers just walked away from their homes because they didn't have the equity. Right now, with the low inventory, everybody's got equity. So there's no reason for me, if I can't catch up on my payments for whatever reason, and the lender's unwilling to give me a plan that I can manage, I'm just going to sell my house. I will have no negative reporting on my credit because the CARES Act protected me from that. And I'm just going to sell my house, get all my equity out of it, and do a do-over. And
but your credit's still good. That's one of the questions.
Yeah. So is refinance possible? If you have equity to pay it off, can you do a refinance?
You can do a refinance, but the key with the refinance is that they have to be out of the forbearance. So although the creditors aren't reporting negatively on the credit report, the account does show that it's in a forbearance plan. So that reporting has to go away and they have to be out of it. So then we can do the refinance.
But credit scores are not being affected.
Correct.
Okay.
That's good to know.
So we know selling is an option. There's equity enough, and we'll see.
So a quick question on the credit. If somebody was in a forbearance and they pulled their credit, is it going to show they're delinquent on their mortgage?
No, it just shows the payment amount is usually zeroed out. And then it just says that they're in a forbearance plan. It's like a comment note on the mortgage. That's it.
Okay. So you kind of touched on a little bit, but let me ask the question. Is selling an option?
Yes, selling is an option.
Right. Because like back in 08, 09, the market had crashed. There was no equity. And so that's where the short sales came in. And now everybody has equity. And I think we're about where we were in 05 and 06 which was the top of the market for pricing. I think houses are about right back where they were.
But there's still just a massive shortage.
Well, and the type of loans too that they've done in the last 10, 15 years are different than what they did before. Now they're,
Qualification.
The qualification requirements are different. So different type of loan product.
So that kind of goes
into risky mortgages are gone.
Yeah, and that kind of goes into another question that someone had asked me personally, is they were worried about the ARM mortgages, the adjustable rate mortgages. Are those coming back? What's happening with that? Have you seen them?
I've seen them, but and we offer them, but I do 0 of those loans. And the reason why is that the rate on those is typically within a quarter. It used to be the margin was a big spread. So it was a benefit to a consumer to do an ARM and have low payments, for the first 5 years or whatever the fixed period was. Now the rate is very similar to a fixed rate mortgage. And the hurdle for consumers is the qualification. So if you're doing an adjustable rate mortgage or an ARM loan, you have to qualify at 2% over the start rate. So typically you're qualifying way over than what you would do on a 30-year mortgage. So it just doesn't really make sense to do those.
That's interesting.
Yeah.
That's interesting. So how difficult is it to get pre-qualified to buy?
It's a piece of cake. Only if you use me. No, I'm just kidding. We have come a long way. So I still see a lot of my agent partners telling the borrowers, hey, I'm going to connect you with this lender and I need all your, documents, 2 years income history, bank statements, all this stuff, you know, your dog's name and the blood type of your firstborn child. We don't need that anymore. We do everything very automated. So they click, they can sit at home in their pajamas, they can do their application. I can verify employment and assets electronically. And I have pre-approvals done usually with 24 hours, 48 hours tops, but usually they're pretty quick.
Cool. Well, I did have an kind of a side question. How solid is a pre-qualification? That was another comparison.
The difference between a pre-qual and a DU approval.
Yeah.
A pre-approval, yeah. So I don't issue pre-quals unless I know you and I've done loans for you before and you need something really quick. But I only do pre-approvals because I just don't think a pre-qual is worth the paper that it's written on. A pre-qual is based on verbal information that you provided to your loan officer, and based on these things you're telling me, yeah, you'll qualify to buy this house. But it never fails. Then you get the documents, or then you get the verifications, and something is just not quite the way the consumer thought that it was, and then that null and voids that letter. So I try to make sure I reviewed everything. I issue the pre-approval, so they just run out and find a property. They're good to go.
Cool.
Very cool.
Yeah.
And I've seen happen quite often is these appraisal waivers. Can you talk a little bit about when somebody pulls the slot machine and gets this no appraisal needed?
Yeah, so it's basically based on statistical information. So I actually just got one on a purchase, believe it or not, that is in course gold. So if the property hasn't, you know, been in a family and they've owned it for 30 years and nothing has ever transpired on it in that time, if there's enough statistical information for the area and for that property, and the value or sales price that we have it at is within a certain percentage, I think it's like a 5% leeway to what they have on the automated systems, you could be eligible for a waiver. So it's really
it's based off the property then too, huh? It's not
it's
just
based on the property.
Okay.
Yeah.
Interesting. Didn't know that.
We thought it would be more based on the risk. You know, if a borrower was putting like only 5% down and maybe their score was like 680 instead of 720 or something like that. But it really, the borrower's profile does not play as much into it as just the statistical data that's on the property. So I'll pull like a property profile and get off of that. And then of course I look at the dreaded Zillow and Redfin and, you know, some other sources that we have. Just to kind of,
They love Zillow.
But I get a lot of waivers for my refinances because I kind of check all that ahead of time. And then when I'm running it, I know what value to put in there. But so it's not a shot in the dark. And then we also use both systems. I'll run them through DU, which is Fannie Mae, or LP, which is Freddie Mac. And sometimes one is more forgiving than the other in getting a waiver.
Yeah, it's interesting because this month, well, the very first one I ever got was with you, and that was back in, I think, December of 2019. We got one on a property. But just this month, on 2 or 3 of our listings, we got appraisal waivers on all 3 properties. So that was kind of cool.
Yeah, it is. And then makes your offer really strong because then you just go in and you don't need to ask for anything. So
we didn't know it until later.
Yeah, that's true.
Yeah, so we didn't know it until we, got in contract, but
you don't have to hold your breath after that. You're like, okay, we're good.
Well, especially in this market because everything, the prices are more.
And it's so, you never know whether they're going to appraise it at the value that you make the offer at, or if they're trying to hold back the value. So that's kind of hit and miss with the appraisers. But,
right.
If there's anybody that wants to comment questions, I mean, it doesn't have to necessarily be about the market specifically, but if you have any questions about pre-qualification,
is there any questions?
Cassandra's here, so feel free to add those. We'll stay on for another couple minutes just to see if anybody has questions. But I think that to summarize everything, seems like the market's pretty strong, pretty sturdy. The prices are, they are high, but they're firm, right? That's everything that we've been.
Well, and going back to the pre-qual versus the DO approval, it's really important right now to have that full underwriting approval.
Also a reputable lender. which is,
Well, yeah,
you know,
definitely. But have that DU approval, because
what is DU approval?
direct underwriting approval, because when we submit offers, we want to have that buying power to be able to possibly, if you have a reputable lender, that you know, can remove that loan contingency when you're submitting the offer, because that gives you a little bit more buying power.
Yeah.
For sure. And a trick, you guys, going back to the appraisal waivers, if I have a pre-approved client that's looking for a home and you have one that you're considering making an offer on, I can plug the property in and run DU before you submit your offer.
that's good to know.
Good to know.
Gotta do anything with these
check.
offers.
Yeah.
Yeah, if you get the appraisal waiver, then we can
Remove
remove the
contingency.
appraisal contingency. Yeah, that's awesome.
Yep.
Awesome.
Well,
So-
very cool. Thank you for joining us today. I think it was really good information, and we're gonna post this on our YouTube channel, and we'll share it on Instagram as like an IGTV video. So if people aren't on right now, they can watch it later. I know it's kind of during.
And if you have questions
hour.
later, you know, feel free to reach out to us. When Betty
Yeah.
posts the video, she'll make sure she links Cassandra's information
Yeah.
in the videos. So if you have any questions, you can contact Cassandra directly and ask her those questions. If it has to do with loan,
Anytime. Mm-hmm.
real estate, you have our information. Reach out to us.
And watch our other Tip Tuesdays, because we talk about all the good stuff. Give you all the secrets besides how to write the best offer. You have to work with us for that.
Yeah. And we like content. So
Yeah.
if you have any questions, tell us. You know, ask those questions, and then
We
we'll
have-
do a
we've-
Tip Tuesday.
And we'll usually do polls of, you know, what are you more interested in knowing about? You know, do you want to know what the pre-qualification steps are? Do you want to know, you know,
The next
specific
one
things?
I'm doing is on supplemental taxes. Nobody ever talks about supplemental taxes. It's never, and I can't tell you how many times clients call me after, or I explain it, and they call me after they close it. I just got this tax bill. What is this tax bill? So that's our next Tip Tuesday.
Yeah.
All right. Well, thank you, Sandra.
Yes.
Okay, guys, let me know if you need anything else. I'm happy to help.
All
Thanks,
right.
Cassandra.
Bye.
We'll see you later.